Welcome to Java, and thank you very kindly for joining me. It's July 9th, 2025. It is also Wednesday, so we will have Discord discussion this evening to kind of go over a few of the topics that I can't really speak about here. This is my third time trying to get this out. Third time's a charm, they say. So should work. We'll be specifically talking about a few of the recent developments across central banks with central bank digital currencies, stable coins, some of the banking changes that are going to facilitate this. We're also going to be hitting on a couple of health topics. So if you're so inclined, feel free to join us there. I'm going to try to put a link into the description of this video, but sometimes the links get stricken. So for today, let's do as it says, get to the point and start with what's going on in the markets. Now, still fear greed meter, greed driving this borderline extreme greed as it was yesterday, the day before, pulled back a bit yesterday, was not a surprise. Today, a little bit more flat. The big story is copper. We'll talk about that in a moment. Now, we've had some action going on in the 10-year yield. There is some serious manipulation, more than normal, going on with the bond market, not just the United States, but across the board. Relative strength of the dollar is benefiting from this morning, slightly up, as opposed to the other currencies. So gaining strength versus not just the yen, but also the euro. We've got cryptocurrencies also up. So there's a bit of flowing money back into these. Some of this is the threats from the administration regarding trades, as well as international settling of some of these things going on. So quick look here. This is United States at the moment flat, but not really much of anything. We've got the VIX dropping, and we've got oil up despite the supply glut threat from OPEC. So this is a little interesting here. And oil is also a tale of not beyond the manipulation, also a tale of the demand. Now, gold is dropping again, hit resistance. As long as it stays above 3,100, I think that's a good sale or buy level for me personally. You can do as you like. So could be a little bit more weakness here. If it weakens, this shows a bit more risk on, along with the greed being still in that high greed territory, and the VIX or volatility index dropping. Now, futures going along with this, saying that they're this still, again, pretty level, but to the upside. So there is a new trade saying that is going on that you also have to calculate not just for the risk down, but for the risk up in these markets. Now, what this tells me is they're all kind of expecting this blow off top to be coming in. Now, this is short-lived move. When it happens, could happen at any moment, very headline driven. This market, it has no sanity whatsoever left in it. So daily driver at the moment is deals still being made. Today is the deadline, but no more delays beyond the August 1st delay that they just put in. And we're watching copper. Now, copper spiked. It's pulling back a bit now. And we'll talk a little bit more about that because it's main driver between production as well as kind of a precious metal. But really, it is, they call it Dr. Copper for a reason. And we'll talk about that. Now, we get Fed minutes today. Everyone looking towards who the new Fed chair might be. They're talking about Walsh. I think Waller still has a good toe in there, but unless you're into the Federal Reserve players, that doesn't quite matter to you. So we've got over $39 billion in 10-year notes that are about to be issued. So this upcoming massive amount of debt is definitely under watch. We're going to see how this happens. So we've got the whole narrative of the dollar is king. Well, not right now. It's not. There's a massive move to get out of the US dollar, but it definitely could be on a sharp correction. What do I mean by this? If this follows historically with what happens, when that spike happens, the panic comes in. There is pretty much massive demand for the US dollar. Physical dollars, the best, will put you in a good position. I am not saying move all of your assets to the US dollar. It's definitely a losing asset being inflated away. However, I do believe that having some in your portfolio, having some physical cash on hand, is a very good decision and a very good diversification, at least for a while now, a small percentage. Now, in this also, the dollar is having its worst year since Nixon. It's been absolutely devastated, um, definitely being devalued long term, not going to make it. They are looking towards a shift to the new system. The new system will be digital, and how it flows into that, we're keeping an eye on that. Now, we've got the EU, Ursula, talking about the strength of the euro and that it could be the next reserve currency, which is kind of silly in my view. The EU says Europe must rearm within 5 years, but not sure how. And this is one of the prime reasons why the euro will not be a reserve currency, and that is because they have nowhere near the military might that it would take to back a reserve currency. You have to have either a massively strong military that can beat all the others or a massive amount of gold in order to back it. They have neither. So, moving forward, back to Doc Copper, I wanted to talk about this a little bit more. Now, the tariff of 200% yesterday, claiming, sent a spike in copper as buyers are shifting for that buy forward in case this tariff takes hold. I don't believe it will. It's a raw material. It would affect inflation massively down the road for not just Americans, but globally. It could cause some serious supply issues. And really, the whole point of this trade war, one of the sides of it is to kind of balance out this trade again. But the second side of it really is jobs. And everyone seems to be losing the view of this. So if they hit copper too much, it would hit industry because it is an industrial metal. Everything from construction to electronics all utilize copper. So yes, I had somebody talk about this, that they're going to strip copper again from all of the housing, have these theft issues. I agree that would happen. However, the whole point of this is that this trade war is really focused on jobs because unemployment is a massive issue that they are not talking about. So, going forward, we're going to watch unemployment increase. And this is something that has happened in the past and not going to go away. So, back to all of this debt issuance, we've got Reeves. Now, she's the Chancellor in the UK. The debt limit she has imposed, they're saying, is stifling growth. This is an echo straight back to right before the Great Depression, back in the early 30s, talking about the growth, because they have to have debt in order to continue. So while this is true, these are pre-markers of what we're looking at now. I want to go back to this $39 billion in 10-year notes. This is the debt. So the Treasury sales were weak. No one wants the US dollar. It is weakening. So this whole dynamic is really shifting. There's a lot of moving parts to it. So what has happened is there are all of a sudden major players in this, shadow entities based out of the Caymans and other areas, and they are, I believe, being set up to appear as real buyers. And we saw this in this last issuance. We're going to see if this happens again. I believe the Fed is buying large part of it because the Fed, as the reserve currency, can still monetize their own debt. It is not covered with tax revenue completely. And when it is, that's going to be massively bad for Americans. Couple of things, a calendar, really nobody's paying attention. Minutes of the FOMC today, and nobody really cares about the rest because it's all about trade and tariffs. So Looking at a couple of things that are going on, we've got this power. By power, I don't mean simply political power, although it translates into that. I mean like plug-in energy power. So we've got a super supply hike coming in on oil to flood the markets from OPEC. This should drive down the cost of oil. This could bring down inflationary pressures for a time, but it's also, we look at oil as a measure of demand, and that is kind of moving forward. One of the fluctuating and now manipulated factors that we have to watch. So, artificial intelligence, we're watching super micro to the upside today. We've got Bank of England also warning about increased risk from hedge fund leverage in their gilts. So, this is their debt market again. They're in the same position, just to a smaller degree. They're also looking at reviewing bank capital rules because they're about to have a systemic failure. When they do, they'll be imposing this new system as well. We've got the United States Army wants to boost Patriot missile supply. This is going to boost defense spending. We are in a war economy, meaning if we did not have war, there would be very little in our GDP. Now, back to the jobs. Supreme Court is allowing Trump to plan for massive government layoffs. Now, even though these are public sector and it does need to rotate back to the private sector, these layoffs are going to have a serious effect because there's more people in the bottom line that are going to be looking for work. Now, this very definitely an echo of the Great Depression, and a lot of these things we've seen before. Now, two more moves that are happening. The first one is tokenization. Now, this is the CEO of Robinhood, Vlad Tenev, and he is saying that they're moving towards this tokenization. And I don't think that people really have a grasp of how this is moving things forward and how large it is for the future. But even he's saying that it's major innovation in the capital markets. And I think not just in the capital markets, but also in the functional production markets. And we will probably likely bring this up and be speaking about this evening. Now, the last thing I wanted to talk about prior to letting you go for your markets and your trade, Pete Thiel-backed Rainmaker's cloud seeding company. They're now questioning whether this triggered Texas flash floods, serious tragedy. Still, a lot of people in denial that cloud seeding is a thing. You can look it up. The companies are listed, very public and very real. So I'm not covering a lot of the smaller things this morning because I do want to let you go to these, and we will be having that discussion this evening. So until I see you again, my friends, resist.